In today's video, I'm going to give you a status update on President Trump's big, beautiful bill, which includes the massive tax cuts, trillions of dollars worth. And as a refresher, because I know that some time has passed, I want to show you the video clip of what those tax cut promises were. So please take a look at this video clip, and this is from February.
So these are the tax priorities of the Trump administration that the president has laid out for members in that meeting today. No tax on tips, which is obviously a very public campaign promise that the president made. No tax on seniors' Social Security. No tax on overtime pay. Renewing President Trump's 2017 middle-class tax cuts. Again, these are the president's priorities. Adjusting the SALT cap. Eliminate all the special tax breaks for billionaire sports team owners. Close the carried interest tax deduction loophole. Tax cuts for Made in America products. This will be the largest tax cut in history for middle-class working Americans. The president is committed to working with Congress to get this done.
Okay, so here it is. President Trump's bill, it's 389 pages long. And it's right there in the title, the one big, beautiful bill. And in today's video, we're just going to focus on the tax issues. All right, so you know what? I think that the easiest way to update you is just to run through this, the most important aspects, in the order that it's presented. So we're just going to take this section by section. Okay, so in President Trump's first term, he passed the Tax Cuts and Jobs Act in December of 2017. And those tax cuts, they took effect in 2018, okay? So most of those tax cuts, they're expiring at the end of this year, end of 2025. So some of those tax cuts, they've already expired. But here, as I've outlined, it says under current law, the modified federal income tax bracket schedule and lower tax rates will expire after December 31st of 2025. So President Trump is trying to renew the 2017 tax cuts in this one big, beautiful bill. If Congress does not renew them, then the tax brackets, they're going to go back up to these rates, which I've outlined in red. Okay, so you see here it says current law. That's because those are the original tax rates. So when President Trump cut the tax rates in his previous term, it was supposed to be a temporary cut. And here it says bracket 1. So I want to show you what that means. It just means that the money that you make in the lowest tax bracket gets taxed at 10%. And you can compare the differences, where the tax rates are right now and what they're going to go back to if Congress fails to pass this bill and renew the 2018 tax cuts. So listen, if the tax cuts don't renew, so in other words, if they don't pass this bill, then the standard deduction is going to decrease from this to this. And look for yourself how big of a difference it is. So it's basically the standard deduction gets cut in half. However, the personal exemption deduction, that would come back. I mean, if anyone can actually remember that deduction, I would be impressed. Now, I want you to take a look at this. A lot of parents don't even realize this, but you get a tax credit of $2,000 per child. So if you have 2 qualifying children, then you pay $4,000 less in taxes. If the Trump tax cuts expire, then it decreases from $2,000 per child back down to the original $1,000 per child. Additionally, this bill wants to raise the child tax credit from $2,000 per child to $2,500 per child. So that would be in 2025 through 2028. All right, so here it is. Section 110101, no tax on tips. So here's what it says. So you would be able to take a tax deduction for qualified tips if you're in an occupation which traditionally and customarily receives tips. So the Treasury Secretary is going to publish a list of occupations that qualify. So it basically means, and this is just an example, let's just say that you get $5,000 in tips. Then you report $5,000 of income, right? But then you would get a $5,000 tax deduction. So your tipped income would essentially be tax-free. So it says that highly compensated employees or workers will be ineligible. So that is defined as $160,000 in 2025. And this deduction, it would be available from 2025 through 2028. Now, moving on to no tax on overtime. So you have to listen carefully because this is only going to be applicable to the premium. That's going to be the tax-free portion. So I'm going to give you an example. We'll use a nice clean number to keep it simple. So let's just say that you get paid $100 an hour. So that's your normal rate. Then your overtime pay, for 1 hour, it would be $150, right? Then it's going to be that $50 that would be tax-free, the premium portion, not the full $150. So I would say that is pretty clear, and it's written down here. Qualified overtime compensation means overtime compensation paid to an individual that is in excess of the regular rates. And also, highly compensated employees are ineligible to receive this deduction, which means it's going to be the same thing, $160,000 in 2025. And this deduction is going to be allowed from 2025 through 2028. Now, moving on to this one. Seniors will get a $4,000 increase to their standard deduction from 2025 through 2028. So here's what happened. The Republicans are trying to pass this bill in the Senate with a simple majority. So it's a special process. It's called reconciliation. If they do reconciliation, they are not allowed to make Social Security benefits tax-free. Like, that was not even an option on the table. Therefore, they're doing this, increasing the standard deduction for seniors as kind of a workaround. Okay, now here's an interesting one. You will be able to deduct your interest on your auto loan if your vehicle has its final assembly in the US, up to, it's a maximum of $10,000 deduction per year. So for this one, they would publish a list of qualifying vehicles. So I'm sure that you could just pop it into your tax software and it's going to show you, whether it qualifies or not. So this deduction is going to be allowed from 2025 through 2028. So this is going to be applicable to cars, minivans, SUVs, pickup trucks, and even motorcycles. But if you make over $100,000 as a single person or $200,000 married filing jointly, then this deduction is going to phase out and it's going to be reduced to zero after a certain point. Now take a look at this one, MAGA accounts. So for US citizens born between January 1st of 2024 and December 31st of 2028, the federal government will give each child $1,000 into their MAGA accounts. And here are the modifications to tax deductions for state and local taxes. So these are the SALT deductions. So the best way I would explain this one is that your property taxes, state income taxes, your locality taxes, those are tax deductible. However, the deduction on the combination of all of those, they're capped at $10,000. So it doesn't matter if you're single, if you're married filing jointly. So they want to increase the cap to $30,000 for married filing jointly and $15,000 for single filers. And this would begin after December 31st of 2025. So we're talking about tax year 2026, which you would file in 2027. So listen, I want to tell you this. We covered about a dozen topics, and I want you to know that there are over 100 topics in the tax section alone. So I counted in the table of contents. But those are the most popular ones that I wanted to specifically update you on. Now, I want you to know this. Two very important things. Like, you have to understand this. So the first thing is that this is not set in stone. Like, this is subject to modification. They can make changes to this, like everything we just covered. And the second thing is that this is not guaranteed to pass. So if the Republicans stick together, they can pass this bill without a single vote from the Democrats. But I just want you to know, this is no secret, that getting unity from the fiscal conservatives on the Republican side may be very challenging. Now, in terms of the timeline of passing this, the House, they want to pass this by Memorial Day, and the Senate, they want to pass this by July 4th. So please take a look.
That third week, the Budget Committee will merge it all together and we can stay on schedule. So it will be up to the Senate at that point. I think they can work expeditiously to get it done. He says July 4th because that's a big birthday for us, and everybody knows that. But I think, and I hope and believe that we can get it done sooner than that.
Do you think it'll pass the House by Memorial Day?
I believe we can pass it by Memorial Day. I do.
Now, the Democrats are saying that this bill would cause millions of people to lose their health care because of the cuts to Medicaid. So here's why. So I'm laying out the Medicaid changes. These are not all the changes, but of course, these are the bigger ones. So there would be a mandated 80-hour per month work requirement on able-bodied adults ages 19 to 64. So for those hours, volunteer work or school work, they would count towards that mandate. States would receive less reimbursements if illegal immigrants are receiving benefits. Eligibility checks every 6 months compared to annual. Beneficiaries over the federal poverty line would have to pay up to $35 per medical service. And I want to show you what Speaker of the House Johnson says that they're trying to do with Medicaid. So please take a look.
What we're actually doing, Greta, is securing Medicaid. We're shoring it up. We're going to make sure that these essential programs are there for the people who genuinely need and deserve it.
Okay, so that's what the leader of the Republicans said in the House. Now I want to show you what the leader of the Democrats said in the Senate.
For months, the Republicans claimed that their tax plan wouldn't touch Medicaid. Now we know that's a bold-faced lie. They were afraid to admit it, but now they can't avoid it. It's slashing Medicaid more than it ever has been slashed before. It's cruel, it's heartbreaking. Senate Democrats will continue to expose this devastating plan and fight for American families to keep their hard-earned benefits.
Okay, so that is your status update on Trump's one big beautiful bill. So let me know what you think. Please subscribe. I'll keep you updated on this entire situation. Thank you for the support, and I wish you a very nice day. Take care.